Welcome to another session of International Finance. I'm waiting for 1 minute. Let the students switch. Let's hope these are the only students. And let's continue with interest monetary fund. Last session, we just discussed something about the special drawing rights. The special drawing rights are the concessional loans which are available to the member countries. The special drawing rights is a skill set approach which is generated for the member countries where they have the quota of buying. And this concessional buying is a facility to manage the trade balance, trade deficit, and other things about the nation. During COVID 19, it was a world savior regarding managing these special drawing rights. The SBRs are being understood as the key resource for the sea. Now, only the special drawing rights are not the mechanism which International Monetary Fund follows. It also provides the funding and payments for various activities. The first, it helps the member countries for improving their balance of payment. It helps to member countries decide economic policies, and it also provides installments when the conditions are met. So, as per IMF, let's talk about your economic policies. Let's talk about the fiscal deficit. And if you agree to these discussions, the quota of borrowing is provided. So this quota is called new arrangements. New arrangements is additional funds available. The quota is subscription which a member country has in pool of money, and bilateral arrangements is defensive agreement where collateral loans is provided. So in international monetary fund, we need to adhere with the first three conditions that we need to improve the balance of payment. The conditional agreement should be there to monitor and contribute IMF in economic policies, and we should have the installment system followed as per the terms of IMF. So if I work with this, I am following the condition of IMF. Then I have the funds available. The first is my new arrangement of borrowings. So this is an additional loan facility which I get for financing my international trade activities. Then I have the quota system. The quota we already discussed that there is a pool of money which I can utilize. This is a pool of funds which I'm being benefited. This is some of amount which I can use. And in the last, I have a bilateral agreements for borrowings, which is a third line of defense. So the first, I have quota, I have new arrangements, and third, the bilateral trade agreement borrowings. So these are certain three terms of payment honors which are shared by the international monetary fund. However, it is always a critical moment because international monetary fund is more interested for utilizing the economic policies in their favor. They want the member nations who are taking the loans, they should have control over the budget, the planned activities and unplanned activities. They should also have the control over the spending policies and deciding the tax regime. They always controls the gap between subsidies and the actual prices. Take an example of Pakistan. They are having a deficit of around 62% of budget. So how, where, and why I'm spending amount is controlled now by international monetary funds. So they are set the benchmark. For example, tomorrow if IMF has a loan on India, they normally talk about how much subsidies to which sector I'm providing. If I'm involving myself in some socio-economic activities and the subsidies or amounts are released, then in such case, I'm critically being evaluated and understood about the loans, and these critical evaluations are done purposefully to make economy as capital oriented. When the capital oriented is there, simply money flow is there, and when money flow is there, the assurity about repayment is done. So IMF has three great conditions. One, you improve your balance of payments, avoid subsidies and discount, and make your firms or make your companies globally competitive. Second, whatever the economic policies, the IMF will work as an advisory and it is mandate to manage your fiscal deficit in a positive way. And third, the installments will be given if the only first two conditions are met. Suppose I am giving each month installment, then each month review will be done by IMF. If I meet the first two conditions, I'll give the installment. If I do not meet, they will give me the grace period of certain weeks or certain months. Suppose I'm getting installment after 3 months, each 3 months. Now, first 3 months, I satisfy the condition. The next 3 months, I feel that the country has not satisfied with the conditions. So, in that case, if the country is not meet with the conditions, then the extension period is provided to improve. If during this extension period the country meets the obligations which are shared, then the lending will be given. But if they again fail, they are given the second chance. And under second extension, even though there is no improvisation, then in that case, the trench, which is nothing but installment, is not released. And reschedule of loan disbursement is taken place. Simply, if I follow the rules, you will get a loan. If I follow the policies, I'll get the installment. If I do not follow, I'll not get the installment. The funding is a quota in special drawing rights. Second funding is new arrangements where I can have the supplementary borrowings depend on my per capita income and my productivity. When we talk about the understanding of loans, we already discussed the concessional and all these things. So we'll skip this part of repetition. Now, most important, what is surveillance function? In surveillance function, it is an watchdog what IMF has done. When the IMF gives the loans, they need an assurity about the repayments. They need an assurity that money what they are given is being protected, it is being honored. And after being money is honored, they need to get that refunded. So they have three levels of surveillance. One, the first one is called a bilateral or country level, which is under Article 4 of consultation. In the Article 4, the actions are direct, where they will analyze the performance of the country by their exchange rate, by their fiscal and monetary policy, and by assessing the economic health indicators. So they are simply doing the SWOT analysis, that is financial SWOT analysis of the country, and they will decide, okay, you're doing good, you are doing bad, you're doing planned expenses, or you're doing surprise expenses. For any country, there is something called as political contributions and socio-economic contributions. If the political contributions or socio-economic contributions are at large level, then there is always a question about social welfare. That social welfare is again the economic conditions which they assess in Article 4. As per the Article 4 of International Monetary Fund, per capita income, GDP, average age, survival life, government expenditure in non-salary. So these are certain economic indicators they use to assess the progression of that country. They study the exchange rate and mechanism to control or regulate the exchange rate. They analyze the valuation of currency and change in the price of exchange rates because this valuation will excel or understand how the situation is moving out. They will also read and understand the fiscal and monetary expenses and the policies regarding to that. So they can visit the member countries, assess all these things, and prepare a report. In simple, Article 4 is an SWOT analysis or ratio analysis of member country to understand the performance what the member country has done, to understand the acts or beliefs the member country is having. So, in simple terms, the first thing they do for surveillance, visit actually and assess the country's position. If they find there is some divergence, some issues, they provide the policy recommendations. And these policy recommendations are nothing but the coexistence or coherence what they have achieved. So when you talk about the first level of surveillance, it's bilateral. The second level of surveillance is regional. In regional, they examine the policies regarding currency unions and regional groups. So they talk about the memberships, contribution, and role played by the country for their multilateral or bilateral trades, how these trade cartels or associations are used for their currency options. What are the different sources of fund management is done by these member countries? This all assessment is carried out as regional surveillance. So first surveillance is direct, that what the member country is doing. Second surveillance is regional, and third is multilateral surveillance. Now in multilateral surveillance, they check the reports and different documents which are published by various third party assessors like World Economic Outlook, Global Financial Stability Report, Fiscal Monitor reports, and other indicators. So, depend on these third party reports, they take a judgmental analysis about the performance of that particular nation. The first World Economic Outlook is a report which states the things which are actually being issued, and they are studying how the actions are moved. So let me just share what is the economic output report. I'm sharing the web page. So if I just click on economic outlook, they talk about the different issues. For example, this first thing they are published on 8th July 2026, April, Jan. So you understand that Feb, March, so 3 months they prepared the report. For example, if I open the report of April, it says Outlook, which talks about shadow of economics. So let's take a look what is Outlook report actually looks like. So they will talk about the statistics part, the growth in GDP. They will talk about the annexures, which will talk about how the things are moving out. Now, in April, there was a war between Iran and US on a utmost level. So they are talking about the same. So I'll just show the what data they have. So it's an summary of their data. So I downloaded the Excel sheet and let me share the Excel sheet for you. So this is the Excel data which is published on April 2016. Now, what are the table of contents? They talk about the regional geopolitics, global stability, and something, something, something. So these are the indicators they are using. Now, if you just go here, they have China, Japan, oil exporters, and so on. So this is current balance of payments. And all this is global GDP indicators. Let's find out if they mention something about India specifically. So they are not having any data about specific. They have major holders like first United States, Myanmar, China, and so forth and so on. So they has everything about world outlook, which is Delhi. Now they have value added and gross output. Now here we find India is there. As per this data, we can see the Germany has value added 2.53, where the India is 1.25, and India is ahead of United Kingdom, and France. Whereas output share, India is again third, at 2.71%. Then we have data about India's output by major RA distributions, that is regional distribution of incomes and so on. So this is a statistical output of first thing. So this way, the outlook data is referred for making decisions. Now we are just open the one content or one report. If I just go through the other reports, the other reports are other data where I can see the things, I can just express the things, and I can understand. Now, what are the chapters in reports? The global prospectus and policy, second defense spending, and microeconomic consequences. So just analyze the data about chapter 2. So I click on chapter 2. This is online accessible to everybody. You can just read this data and understand it. So I just make it control F to find India. So here they have data about India. What they mention, the analysis used the model Euro area model, which includes the block of 11 major Euro area countries, plus 13 blocks covering the major world economies, standalone blocks like China, India, Japan, Sweden, United Kingdom, and so on. So this is a comprehensive global study of what is happening on international level. So this is one of the report which is referred for making the surveillance. The second report, what they study is Global Financial Stability Report. Now, this Global Financial Stability Report is an creation of International Monetary Fund, like what we have the war reports. So just see what is this report about. This report talks about how the globalization takes place. Now, this report was prepared in April and October. So the period between the reports is May, June, July, August, September. So global output is 6 months, whereas the first report was period prepared in 3 months. Now let's talk about April report. So it talks about the global stability in Middle East, highlighting multiple amplifiers and resilience. So this report is talking about how the Middle East and other countries has impact of war. What are the challenges regarding capital flow to emerging markets? They are talking about the global financial confront in the war, their impact, and so forth and so on. So these are the certain chapters and blocks. If I just click the index for simple understanding, they have, let's find out interestingly anything about India. So they are classified the India as emerging market. Then they are said that the main text presents baseline estimate that 20 major emerging markets are analyzed. So they are using India as emerging market. As per them, the results showing the emerging countries as baseline. And so let's see the annexure 2.4. I will go back. So these are the annexes about growing countries. So they has the change in securities holding, change in, so these are the mathematical presentation, and they talk about how the things are moving about, how the things are impacting the financial stability of the countries. So this is our pure financials. We need not go that deeper for our syllabus. So I hope I shown you the two reports, which is essential. So World Economic Outlook is prepared 3 monthly, whereas the Global Financial Stability Report is prepared 6 monthly. The Fiscal Monitor is an evaluation or their internal report where they analyze the fiscal policies, the revenue collections, and the point between target and achieve target, what and how it is happened. They also provide the technical assistance and capacity building to the member countries. So, in technical assistance, they provide tools, they provide trainings, and they provide informations the member country can utilize for its upgradements. Whereas in capacity building program, they work as the consultants to take the short-term decisions by providing the database, by providing the expertise advice, and by guidance or providing training on certain levels. They offer certain online courses and peer learning on there. So in technical assistance, the guidance is offered. Then the IMF also provide online courses to member countries, and these courses are nothing but an outlook. Let me share the training website. So, what are the training programs? The Interest Monetary Fund has n number of training programs. Like, I just zoom it for your reading purpose. First is local currency bond market, medium debt, residential property price indices, macroeconomic forecasting. So, these are the training programs and sessions which are conducted online. For your knowledge, just click on the first program. So, this program is starting from 1st January 2026 till April. It's a 15-week. Delivery mode is online. The target audience is all government officials. They're not talking about individuals. They're talking about officials and all the people who are interested to take this course. So, as far as qualification is concerned, they should have adequate knowledge about economics, statistics, and finance. And the course will be explain the contents and its practical application. There is no examinations, it's just a learning. So this way, they create different courses which the member countries can take to train their officials. If somebody want to have the online training, they also provide the online trainings where there are introduction of financial planning and policies. So these are details of their courses. We can register and start it. There are about 2 lakh global communities in 90 or more countries which are taking advantage of IMF trainings. Now, these trainings are interested for motivating people for understanding the more better. This is a repeated thing. So I suggest you just go through this. I'll wait for a few seconds. Now, we already discussed in the previous slides the government structures and board of directors and so forth and so on. So I'm not repeating the points. I'm just giving some time to read yourself. Now, here, most important, you should remember the voting rights of each member and other things. The benefit of this data is when you're writing about IMF, you will be writing something different, what other people are not. And this difference will give you more score. This difference will give an advantage of scoring high scores. So please follow the C. Let's move on. Let's talk about the India. India is a founding member of International Monetary Fund. He had joined the International Monetary Fund in 27 December 1945. The current quota for India for special drawing rights is 13,114 billion, that is 2.75%. The borrowing history of India, that India has taken 5 billion loans under extended fund, whereas in balance of payment crisis, it has taken SDR of 2.2 billions, and also India has borrowed a rapid loans time to time. So when we talk about the conditions, the workouts, we always deals the loans, and if I see almost 9.8 billions the India has drawn from International Monetary Fund. The current role of India is he is net creditor since 2012 and contributes to the new arrangement borrowings and works in emerging economies. RBI Governor of India is the governor over the International Monetary Fund, and on behalf of India, he contributes and understands the policies and what are the role making or decision making. He will simply analyze and will make sure that the benefits of being member of IMF is India's achievement. So please read this slide and remember the figure. India is 8th ranked largest voting power in International Monetary Fund. The current quota is $13,104 billion. It is not in rupees. So let's move on. Please read this slide because these figures will give the good marks in understanding IMF. The IMF is basically focused on exchange rate, balance of payment, and short-term lendings. It has 190 clients with compared to the World Bank. So I temporarily skip this comparison with the World Bank. Will come when we complete the discussion about World Bank. Now, what are the major crises the IMF has entered, or where the IMF has played a vital role to control the damage situation? So these are certain examples. The first is Latin America debt crisis. In Latin America debt crisis, there was association of NAFTA, that is Canada, America, and Mexico. This trade has a bilateral arrangements where they are borrowings. from each other. And in that case, the Mexico has defaulted the funds, and it was an emergency because Mexico was outreached the available foreign exchange. So there was a great debt crisis resulting in failure of banking system in Mexico. Since Mexico is rich about mineral resources, it impacted the companies in US. Major workforce in US is from Canada, so it has affected the NAFTA associations. There, the mutual agreements were entered with the help of the International Monetary Fund, and they helped to overcome this Latin American debt crisis. The second debt crisis was Asian financial crisis. Now, the Asian financial crisis is also a case study about Asian tigers. In East Asian countries like Thailand, Indonesia, South Korea, they virtually launched so aggressive economic values that they was in inflation mode of 14%. The aggressive mode has turned their currency devaluations, and the inflation has made the country that people are not able to purchase their basic necessities. In Asian financial crisis, what happened? The prices are changing rapidly, but the income of people was not changing. The rapid economic blow was happened to the economies. For example, Thailand, Indonesia, they opened their economies for all type of capitalist companies. So the foreign direct investment has flowed a lot. They start using the country resources. So exploitation of the things happens. People get the job, people start spending, and there was no savings. So mobilization of saving was lapse, and unfortunately, after certain time, when it was a hyperinflation, the hyperinflation means a situation where the crisis has a greater influence. The people was not having money. Today, the price of milk was 10 rupees. Tomorrow, the same milk was valued at 30, 90, 120. So it was uncontrollable situation what the people has entered. And there, the IMF has played an global role to understand how the things are happening, how the things are moving, and what are the progressions. So here the IMF has paid up the money, they has restructured the debts and helped the Asian crisis to overcome. Because if these countries are fail in trap of debt, ultimately they will affect on automobile, they will affect on mobile manufacturing and so on. The Russian crisis is about restructuring and valuation of Russian currency. Russia is one of the greatest, largest economy and having the largest geographical coverage across the globe. The package of 22.6 billion was given for controlling the devaluation of Russian currency because Russia has contributed a lot in international trade, energy support, and supply of ammunition. Similar, they are extended in European debt crisis, the Greece, Ireland, UK, and so on. These crises were about bailout packages where they are in the process of going out from International Monetary Fund or they are helping for the building up the European Union. So these are certain crises where the IMF has contributed. These are certain data. Will not go more in detail. So we have covered the most part of IMF. I'll just wait for a few seconds. Please read the slides. And the key summary of all this presentation is this. This talks about what is IMF, what the role played, and so on. So that is all about International Monetary Fund. Anybody has any doubt in International Monetary Fund? Now we covered the major organization in International Monetary Fund, which is the crucial part of international trade. Now let's talk about the second most important thing, that is World Bank. Let me share a PPT about World Bank. Now we have the thinking the World Bank is something the bank on global level which contributes, which works in cooperation, and it helps the member nations for adjusting their saving accounts and deposits. No, the World Bank denotes an international monetary fund, but actually the pool of money which is comprehensively working for the direct intervention, providing loans and collecting the deposits of different nations for inter settlements. The World Bank is divided into two. The first is International Board for Reconstruction and Development. The second is International Development Association. So all these banks or associations on global level, their basic interest is to ensure the functioning of everything in smooth and effective way. So they are finance and refinance bodies working on global level. What is the World Bank? World Bank is a global financial institution, and it is creation of Bretton Woods Agreement 1944. The basic role of World Bank is extradition or removal of poverty on global level and providing the sustainable growth and financial achievements to all its 189 member countries. The World Bank has group of structures. It is classified and divided into four groups. One is IBRT, second is IDA, third is IFC, and fourth is MIG. The IBRD is International Board for Reconstruction and Development, which works about the capital asset valuation and improvisation. It intervenes on global level for financing and refinancing, whereas the IDA, it is again one of the board which talks about the international development, but it is more on share basis. It is not on the fixed investments. The International Finance Corporation is the third role, which is played by IFC. In case of the MIGA, it is nothing but multilateral investment guarantee agency, which works for World Bank. So the first I have IBRD, sorry. The IBRD has rule for fixed deposits and sorry for investment in long term in assets. IDA has foreign institutionals. IFC has dispute settlements, and the MIGA is like currency chest settlement of the financial transactions between member countries. So it is the World Bank which is supporting and argumenting about the financial settlements and value propositions on global level. The bank has the highest authority as board of governors. The board of governors is having voting power as per the capital contribution, and the consequences of this contribution are mandatory to its member countries, and it is expected to honor the decisions. Each member country can appoint their banking governor or finance minister. There are total 25 executive directors. In case of International Monetary Fund, it was 24. But in case of World Bank, there are 25 executive directors who are managing the daily operations. And the major shareholders of World Bank are United States, Japan, and Germany. Total members of International Monetary Fund was 190, whereas total members of World Bank are 189. The total cumulative capital of IBRD, which is founded in 1944, is 700 billions. They finance the capital to the member countries. They provide the credit rating and other services to member countries. They retain the earnings or they hold the loan payment cycle for their member countries, and they calculate and provide the different bank guarantees for their member countries. They are also has a successful lending for maturity honor payments like LIBORs or CBARs or SOFRs. LIBOR is an system of payment where the interest rates are considered as the parity theory for valuation of currency. If any assets are matured or there is an issue of repayments, then the cash credit is available or the short-term lendings is provided by the World Bank. The loans up to 35 years, from 5 to 35 years, is granted by World Bank. We have seen that International Monetary Fund highest is 10 years, that is in concession. And normally the IMF provide loans of 2 to 3 years. But IBRD is basically interested to provide the loans more than 5 years. So long-term capitalization and capital investments are achieved by IBRD. Now, the formula, even though I mentioned here, it's not part of the syllabus, so just forget the formula. If you can remember, it's a great. Otherwise, we're not interested in the formula of lending. The the IBRD is works on the reconstruction, recite the growth of a nation by understanding its infrastructural requirements. It provides the member countries the loan extension for their financial needs for capital investments. It indirectly contributes towards building of the member nations by entering into various loan agreements. Normally, they have extended, sorry, they had extended their cooperation much more than International Monetary Fund because their lending pattern is liberal compared to the International Monetary Fund. The major decisions are taken in executive board meetings. Total 189 members are part of executive board meetings, where the 25 key executive directors are appointed among them with a retirement of 3 years. It is mandatory for executive board to meet at least once in 3 months and evaluate the performance of World Bank and its contribution in global financial system. The major products what the World Bank follows is investment loan, development loans, risk project loans, and the bank guarantee. So it is following all the principles like bank. It is providing loans for fixed asset investments or current investments in the joint ventures or turnkey projects. It provides a loan for socio-economic development or development of infrastructure. It works as collateral bank guarantors for the bilateral multilateral agreements, and it helps the government and the trade on global level by risk profiling. In risk profiling, they not only analyze the risk rating of the member countries, but also suggest the corrective actions and protective gears, how the frauds or the cheatings are done. They also provide a consultation to how to avoid the disputes among member countries about the trade settlements and trade issues. Till date, they are contributed to 12% of regional growth in different member countries. About 1.5 billion loans are still given by them. They are contributed in physical development. So, on average, the 6,000 kilometers are built in every year. The IBRD is supported by another functionality which is called as IDA. IDA is International Development Association, and we'll discuss more about IDA in coming session. So that's all for today. After IDA, we'll talk about the lending and etc. Then we'll discuss something about the difference between IBRD and IDA. Then we're to talk about the other factors of World Bank, their governance, their formulas, and how they focus and help for the examinations. So after this, we'll finish in Unit 2. Already the Unit 2nd is finished in financial reporting. Unit 1 is finished by tomorrow morning in AFM session. So start preparing your CC. One general announcement to all the students.